Welcome to the third episode of Dividend Investing Insights, your go to source for all things dividend investing. Whether you are a seasoned investor or just getting started, our channel provides insightful analysis, expert tips, and the latest news to help you build a reliable income stream through dividends. Join us as we explore techniques to maximize your investment returns. Subscribe now and take control of your financial future with the power of dividends. Before we start, a quick recap for the week. The share market had mixed results with S&P 500 gaining 3.75%, Nasdaq too gained 6.5%. At the same time here in Australia, ASX 200 lost 2.08% to end at 7,777 points. Anyway, as I've said earlier, as a dividend investor, we should not be excited or alarmed by these movements as share prices go up and down all the time. And you, as an investor, should focus on companies that have the ability to pay consistent dividend in the current year and increase dividends in the years to come. In the episode last week, we had looked at why JP Morgan Chase share is a good buy. Today, we will extend the discussion and see how much would be our investment today if we had invested $5,000 in JP Morgan Chase in 2015. We will also consider how the same $5,000 would have fared if we had invested the same amount in a term deposit at a bank. Now, first of all, let us understand what is compounding. As per Investopedia, compounding is increasing value of an asset due to interest added to the principal each year. Today, we will apply the same compounding principle to JP Morgan Chase and reinvest the dividend received each year to buy more shares of JP Morgan Chase and see what is the outcome. Let us see this in action with an example. Again, as I said earlier, we are considering JP Morgan Chase, ticker symbol JPM, with a current share value of $205.8 and a dividend yield of 2.24%. Now, for our example, let us assume we had invested $5,000 on 2nd January 2015 when the share price was $62.18. At $62.18, we would have purchased 80 shares. Now, JP Morgan Chase over the years has been paying dividend in first week of January, first week of April, first week of July, and in October. While this has been the trend over the many years, however, it is not necessary that JP Morgan will follow this in the years to come. Anyway, coming back to our example. Now, we bought for 80 shares on 2nd of January and on 4th January, JP Morgan paid a dividend of 40 cents per share. The dividend goes to a cash account and subsequently on 1st of April 2015, JP Morgan shares announces a dividend of 40 cents a share again. Then on 1st of July, it increases the dividend to 44 cents per share, and on 2nd October in the same year, JP Morgan pays a dividend of 44 cents per share. Let us now look at the value of our investment. At the share price on 2nd of October was $59.59, and our $5,000 investment, including our dividends, has dropped to $4,901, as you can see on the screen. A normal investor would be alarmed as the investment value has dropped in spite of 4 dividends. However, as a dividend investor, if the company fundamentals are strong, you should retain your investment. Now, in the $4,901, we have cash of $134.2. And as the JP Morgan share is 59.59, so let us buy 2 more shares of JP Morgan. We now have 82 shares of JP Morgan, and on 4th January 2016, the company pays a dividend again of 44 cents per share. Following the trend that we have seen over the past many years, JP Morgan paid a dividend of 44 cents per share again on 4th April 2016. Again, on 1st July 2016, JP Morgan increased the dividend to 0.48 per share. And again, on the last dividend of the year, on 4th October, it paid a dividend again of 0.48 cents per share. The JP Morgan price on 5th of October by now has returned to $66.89, which means that our total investment of $5,000 has now risen to $5,635.86, which allows us, the cash component allows us to buy two more shares. Thereby, our total shares count has become 84. 2017, rather than going into the details, in summary, in 2017, JP Morgan paid one dividend of 0.48 cents per share, two dividends of 50 cents per share, and one dividend of 56 cents per share, which means that the dividends increased twice in the year. 2018, again a similar trend, four dividends, three dividends of 56 cents per share, and one dividend of 80 cents per share. A similar trend was observed in 2019, 2020, 21, 22, 23. And by now, the dividend has increased to one dividend per share. In 2024, again, the dividend has been paid in 2024. The dividend has been paid as per the calendar that we have seen for many years, in three times in a year, in January, April, and July. And by now, the last dividend that was paid out was for $1.15 per share in July. Now, let us look at the current value of our investment. We have been holding this investment since 2015. The share price as of this recording is 205.8 cents. And our share count has increased to an astounding 104 shares, which we have bought by reinvesting our dividends. The total value of our investment, including the cash component, has risen to a whopping $21,160. Um, Now, before we move ahead, let us look at how the bank term deposit would have performed. If we would have invested the same $5,000 in a term deposit that was paying 7% per annum, our investment would have been $9,621, while JP Morgan has paid more than double. In fact, JP Morgan has paid out at a rate of 16% compounding year on year. Now, to conclude, on both these comparing both these examples, in this example, both bank interest and share investment, we have not considered income tax. However, in most countries around the world, dividend is charged at a lower income tax percentage as compared to bank interest. We have considered brokerage, because a number of times you would have seen that we left a part of the cash investment as brokerage. While third and very important, while the current dividend yield is 2.24 percentage, however, at our original buy of 60 odd dollars, our dividend yield is almost 6%, $1.15 dividend per share at a buy of 60 odd dollars give the dividend yield of 6%. And last, as a dividend investor, you should look for companies that not only pay dividend but also increase dividend. JP Morgan has tripled its dividend in the last 7 to 8 years and also given a share price growth. Going by the same trend, it is possible that by 2030, JP Morgan is paying a dividend of $3 per share. So, for all those who are watching the episode, putting the checklist again, I encourage you to use this checklist, assess shares, and most importantly, subscribe to the channel, like the episode, provide comments so that we can provide more insightful videos to you. So, until next time, thanks a lot for watching until the end, and see you soon with another interesting episode of dividend investing. Thank you.